Good morning, friends. Welcome to the daily morning podcast of SBI Securities. Let us check what happened in the market yesterday. So, yesterday was the interim budget day, and the day play out to be flat as far as Indian equity markets are concerned. So, budget was pretty much in line with expectation. We have already shared the detailed budget report analysis with you all. The report is available on SBI Securities website. We have already shared the report on SBI Securities Telegram channel. At the same time, the report is available with your dealers and advisor. So in case you are a client of SBI Securities, you can request your dealer and advisor to share the report with you. Moreover, on Monday, we will be hosting one webinar wherein you all can attend that webinar, and we will try to decode the budget in a more detailed fashion, and what is the way forward as far as equity markets are concerned. However, today I would like to give a very few important points, key takeaway from the budget. So first of all, the budget clearly emphasizes capex led growth. Budget states that the capex spend for financial year 25 will be up by 11% at 11.1 trillion rupee. So this clearly shows that the capex program from the government will continue, and all the key sectors such as defense, auto, electronics, railway, solar power, renewable, all this sector will continue to remain under focus as far as capex spent by government is concerned. At the same time, government has avoided any populism. So we have seen there is no change in tax rate. So there is no change in personal tax rate or direct tax rate or indirect tax rate. So that's a big positive as far as fiscal prudence is concerned. Government is on the way to reduce its fiscal deficit. So there is no change in that plan, and the fiscal deficit was expected to be at 5.3% of GDP for FY25, and against that, government has said that they may achieve 5.1% of fiscal deficit in FY25. So that's again positive as far as fiscal deficit is concerned. The third important point is borrowing limit. So the borrowing limit which the street was expecting to be around rupees 15 trillion for FY25 has came in tad below and is 14 point is somewhere close to 14 trillion rupees, and that augurs well for the private sector, because the lesser the government borrow from the market, it will leave more liquidity for banking system to lend out to the private player. So liquidity concern will get addressed as far as borrowing is concerned, and to that extent we have seen cooling off in the bond yield, and we all know that all the banks, especially PSU banks, have a large investment portfolio as far as government bond is concerned. To that extent, there will be mark to market gain on the treasury portfolio of the bank. So that is the reason we saw a decent rally in the PSU bank yesterday. Overall, if I have to I have to sum up, the budget was a kind of neutral event as far as Indian equity markets are concerned, and hence we have seen yesterday there was no reaction in equity market. Market ended flat, and now market will move on. We all know that this is a vote on account budget. The main budget will be presented in the month of July post election. So that budget will be the key budget where we need to keep our watch on. So the big event, two big events are behind us. One is US Fed meeting outcome, which was again kind of neutral, and it is very pretty much clear that rate cut is not coming in the month of March. So that has been pushed back maybe to the June. At the same time, the interim union budget is behind us, and it seems to be a neutral event as far as equity markets are concerned. Yesterday, when we were all listening to the budget, many auto companies were reporting a January sales number. So these are the wholesale dispatch number as far as auto companies are concerned, and we have seen a very strong set of numbers from Maruti. So Maruti has told that their sales were up by 16% year over year to 1.99 lakh unit in the month of Jan. SUV sales, which is a high margin product, were up by 75% year over year, whereas export grew by healthy 38%, and the newly launched SUV continue to be well accepted in the market. So Maruti, we have seen a very strong set of results in Q2. At the same time, a very strong January dispatch number. So Maruti is the one of the under-owned stock, and I feel that Maruti will continue to react positively in short to medium term. Other few companies which have reported healthy sales growth number are two-wheeler companies. So Hero MotoCorp has reported 22% year-over-year growth in scooter volume and 37% year-over-year growth in motorcycle volume, whereas export volume were up by 75%. So a strong set of number again coming from Hero MotoCorp. At the same time, we have seen a very strong set of number coming from Bajaj Auto and TVS Motor two-wheeler portfolio. So Bajaj Auto two-wheeler sales were up by 9%. TVS Motor two-wheeler sales were up by 14%. So that's positive as far as two-wheeler companies are concerned. So we may see some positive reaction as far as Bajaj Auto and TVS Motor is concerned. In fact, for Bajaj Auto, domestic three-wheeler sales, which is again a high margin product, grew by 12% year over year. And for TVS Motor, EV scooter sales has grown by 34% year over year. So pretty good set of number as far as two-wheeler companies are concerned. Royal Enfield reported a tepid 2% year over year growth. However, it has been tracked by 20% degrowth in international sales. The 350cc plus segment continue to do well as far as Royal Enfield is concerned, wherein the sales is up by 31% year over year, whereas up to 350cc, due to increase in competitive intensity, we have seen 1% decline in volume as far as Royal Enfield is concerned. Commercial vehicle continue to disappoint. So Ashok Leyland has reported 9% degrowth, 8% degrowth in domestic volume in the month of Jan. Domestic medium and heavy commercial vehicle volume fell by 17% year over year, whereas bus segment has reported 19% growth, 90% growth year over year. Light commercial vehicle volume were also down by 11%. Weak set of dispatches from Ashok Leyland, and to that extent we may see some negative reaction in the Ashok Leyland today. Tata Motors, again commercial vehicle continue to be weaker as far as Tata Motors is concerned. On tractor front, all the three companies have reported a weaker set of number: Mahindra, Escort and Power Tiller. So overall, if I have to sum up, a good set of numbers from Maruti and two-wheeler players like Bajaj, Hero and TVS, with growth across both domestic and export market. Tata Motors and Mahindra reported good passenger vehicle sales, but commercial vehicle continue to remain weak. Ashok Leyland and Royal Enfield, which is Eicher Motor, were disappointing. Tractor industry continue to remain weak due to the lower Rabi sowing and lower reservoir level. So we may see positive reaction in Maruti and two-wheeler players like Bajaj, Hero and TVS Motor in the trade today. The detail to this analysis has been shared on Telegram channel, as well as it will be covered in our daily morning report, which will be available on SBI Securities website, and you can ask your dealer or advisor to forward the same to you. Moving on to what happened in the US market yesterday. So yesterday was a positive day as far as US markets are concerned. Dow Jones, Nasdaq and S&P up by 1%, 1.3% and 1.25% respectively. Again, earnings season is going on in the US market, and we have seen strong up move by companies like Ford Motors. Meta, which is an owner of Facebook, was up by 14% post reporting a good set of number, and the company has decided to pay quarterly dividend for the first time. Amazon was up by 7% on the very strong set of number for the December quarter. Apple was down by 3% despite of good set of number. However, the outlook for China seems to be bleak, and hence we have seen 3% cut as far as Apple shares are concerned. In terms of other key indicator, yesterday US bond yield has further cooled off to 3.9%. Dollar index continued to trade at 103 levels. Crude is trading at $79 to the barrel, which is again down by 2%. That's positive as far as Indian equity markets are concerned. And as discussed, 10-year treasury yield have cooled off to 1 month low at 3.9%. So that's overall positive indication from the global indicator. Today on Friday evening, we will see January jobs report coming in the US, and it is estimated that payroll to have grown by 185,000 position, and unemployment rate to inch up by 3.8%. Other key companies which will be reporting results in US are Chevron, ExxonMobil, BMS, which is the Bristol Myers Crop, Cigna, AbbVie. So these are the few companies which will report numbers as far as US markets are concerned. Today morning, all the Asian markets are trading in green. At the same time, a GIFT Nifty, which is an early indicator of Indian equity market, is showing that we may open gap up to the tune of 150 to 200 points in the trade. Moving on to the key results. So yesterday, many companies also reported quarterly numbers, and just I would like to summarize these numbers into 2-3 buckets. So companies like Castrol India, Jupiter Wagon, Texmaco Rail, Indian Hotel, Abbott and Precol reported a very strong set of numbers. So we may see very positive reaction in all these companies, especially Castrol and Indian Hotel reported a very strong set of numbers. To that extent, we may see a gap up opening in Castrol and Indian Hotel today. A very weak set of number coming from Bata India. Bata India continue to disappoint the street, and we may see very adverse reaction on Bata India. Somani and Rights also reported a weaker set of number. Minda Industries and Titan reported in-line set of number. So overall detail result analysis again we will cover in our morning report, and you can check in that. Moving on to the key news based development. So yesterday evening there was a con call from Paytm management on clarification on impact of RBI. So we have seen that the impact is likely to be significant for Paytm in terms of business growth, and the company may have to take a hit of 300 to 500 crore in terms of business for Paytm. Again, a kind of negative impact as far as Paytm is concerned. So you are recommended not to catch a falling knife. Stock may continue to react negatively in the trade today. So kindly stay away from Paytm for some more time. So again, today again, many more than 50 companies are likely to report results today. So prominent among them, among the Nifty is Tata Motors and UPL. In addition to that, few large companies like Bank of India, Bikaji Food, Century Textile, Devyani International, Engineers India, Goodyear India, HG Infra, Jubilant Pharmanova, Interglobe Aviation, India Glycol, Moil, Mahindra Holidays. So more than 50 companies will report their number today, and the entire list is available in the morning report. So again, a result heavy day, and being a last trading day of the week, we may see stock specific action as far as results are concerned. There is a volume update from the NMDC. NMDC has told that for the month of Jan, their sales have increased by 19% year over year to 4.56 million ton, and production is up by 8% at 4.54 million ton. So that's positive for NMDC. Prime Focus, a media company, has approved a raising of 4,000 crore through right issue at the price of 90 per share. So we may see some reaction as far as Prime Focus is concerned. Mahanagar Gas has told that they have acquired 100% stake in Unison Enviro for rupees 562 crore. A neutral development. However, we like this company. One can look at this company from a medium to long term perspective. In terms of IPO offering, so today there is no IPO which is available for the offering. BLS e-services is an IPO which was subscribed 163 times on a day 3. So that's over. In terms of PB Fintech, we have seen hand change between few institutions. So Claymore Investment have sold 2.44 crore shares. So they have exited completely a 5.4% stake at 992 rupees per share. And few guys like New World, Capital Group, Capital Group and Small Cap World Fund have entered. So it's a hand change between institutions. Similarly, we have seen hand change in Indus Tower between institution. Similarly, we have seen hand change in SML, Isuzu and Tourism Finance Corporation. So overall, if I have to sum up today's discussion, so yesterday budget was in line with expectation, interim budget. However, the final number will be presented in the month of July, and I feel it is a neutral event as far as equity markets are concerned. No negative surprise from budget is a big relief to the stock market investor. So market will move on and will track the stock specific action, as well as what are the global cues which are emanating from markets like US. So yesterday all the global cues were positive, and the big positive which I see is the correction in the US 10-year bond yield to 3.88%. that augurs well from the foreign institutional fund flow perspective. So FII till the time US bond yield are cooling off, FII flow may see we may see increase in FII flow as far as domestic markets are concerned. Uh, in addition to that, the focus will continue to remain on order flow from various sector where government is going to spend the capex. However, one has to keep in mind that we may see some order inflow in the month of Feb, maybe till 28th or 25th of Feb, and post that we may see a slack of order inflow because government will go into the election mode. Code of conduct will be implemented. So March, April, May and June, so 3 to 4 months will be the slack period as far as order inflow for all these sectors are concerned. And then post, once the new government is in place from the month of July, we may see increase in order inflow. So order book driven businesses can see a reduction in news flow, and to that extent stock may continue to trade in a range bound fashion. Stock specific action will continue. So Castrol Indian Hotel reported a very strong set of number, so we may see positive reaction in the trade today. Bata reported very weak set of number. Adverse reaction will be seen. Paytm will continue to remain under pressure, and you are not advised. It is not advisable to buy on deep or catch a falling knife. The business is in trouble, and hence the March quarter will be a big disappointment as far as Paytm is concerned. So kindly avoid catching Paytm in the falling trade today. Auto sales number, a pretty strong set of number from Maruti, Bajaj, TVS and Hero MotoCorp. All these four stocks will react positively in the trade today. Ashok Leyland will likely to be reacting negatively in the trade today. So that's all for the day. As to decode the budget, we are conducting one webinar on Monday for all of you. It will be available live on the YouTube channel. So kindly stay tuned to that, and we will try to guide you what is the way forward as far as equity markets are concerned. That's all for the day. Thanks for patiently listening to us. Have a good day.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.